Hello traders, today as always we will make a full breakout of the situation which we had the previous week, the interesting market moves, we will observe them and we will make some predictions for the next week. Please don't forget to put a like button and to subscribe to our YouTube channel and to support our project. Thank you very much for your attention. Let's start. As you remember, the previous Friday, I told that with high probability the price will make a higher high and only then it will go down. Really, on Monday we even saw the HFT volumes which occurred here. Market maker took the position, we saw fast rejection, and finally, after this involvement, the price went to the upside. Here is the same. Broke some structure, made a retest and this involvement, and only then was a pullback. As you see, the price travels from liquidity to liquidity, and sometimes if we have information from volume analysis, we can really predict what will happen. On Friday there was fast rejection from this commercial level. But this level is closing positions of hedgers. This is the average price they closed their losses. So this level is not so strong as usually if traders open new positions on such levels. I think that it can be broken next week, but of course we will see very volatile descending sideways trend. But nevertheless, I will prefer to short when the price will break down this level and then go lower, because everything which is higher than this commercial level, it can be bullish. So let's go further. Let's look on Nasdaq. And what do we see? HFT volume on market close on Friday, significant tick chain for Nasdaq. It happened on their important 13,000 price level. At first glance we can think that these are stop losses, but if we look inside this tick chart, we see that all these volumes were thrown into this limit 13,000 level. So here was a limit seller, and we see that this time duration 681 milliseconds, it was algorithmic purchases because this chain was into level and not by one print. Stop losses, they look like this and this, but here we see algorithmic purchases into limit level, and so I expect that the price after some pullback it will go higher. You know, these multiple HFTs which were created here also not stop losses, and we can see on the tick chart that the base of this chain it is not a higher high. If it starts from here, that would be stop losses. But such chains which start lower, these are not stop losses. Like here. This is market buy. It takes all limit sellers because not enough liquidity for this amount. Here also. These are market buys. And I will return you and show the difference, because these are stop losses. The price comes to some level and activates, and market sell pushes the market depth. The same is here. Market buy was thrown into market depth. So in such a way, when you look on tick chart, you can distinguish, and so in such a way you can predict that the price after correction, of course, market maker need to unload this position, maybe here, and from here it will go to the upside. Really, maybe it was not hedger, it was market maker who quotes their price on 13,000. So he put enough liquidity for buyers to satisfy all the demand, and then due to very bad news of the official recession in the US and monetary policy, it is very easy to involve really traders in shorts and to unload this position. So the next one, let's look on euro. As you remember, we established this very strong supply zone and the price really rejected it all the week. But now it is hard to see what will be the next. I expect that this zone will be really broken the next week. I think that first of all it will be some pullback, but then the price will go and break this strong supply zone. The next, take a look on gold. After it was overbought the previous week, it really went down. Some sell stops were activated. After it retested this descending sideways channel, made an involvement, and then fast rejection. And then gold continued to rise. Now the price closed on the downtrend line on the daily chart, and I think that after some pullback it also will go higher, as funds accumulated very strong short position from the start of March. So the last half a year short position accumulated, and now they will continue to liquidate it, to close it. Let's look also on natural gas. As you remember, here we established a very strong limit level. This was, and here we saw very strong cumulative delta with open interest increasement. And I thought that if the price on Monday will break this limit zone, it will go lower. But it did not, even by one tick. The price went higher, then rejected, traded higher than this level, and went to the upside. Now it returned because this level is very strong magnet. And the next week, I think that if the price will break it, it will really go lower. Now on daily chart, we see that the price closed under the commercial level. So we have some chances to fall more in natural gas. The next asset is soybeans. We had on Friday very strong tick chain near the uptrend liquidity, and as you remember, if there will be a breakdown of this HFT level, the price for sure will go to the volume level of May 21st and even can go lower. This is very specific information for swing traders, and we can use it. And finally, I want to show you coffee. It is 100% according to my forecast, and as you see on Monday the price made really a rejection of this HFT, then some involvement, and went to make the higher high. Even organized the Ask HFTs that inform us that market maker unloaded this position that collected on this price level. And as you remember, it is because the fuel, the divergence of volume delta was almost in zero zone, and a very huge increasement of quantitative delta informed us about the potential of this situation. So traders, I hope that this volume analysis will be useful for you and will create the better understanding of the market, because analyzing the supply and demand with the help of order flow data, we can make better predictions. So good luck and see you on the other side the next week. Goodbye.